Morning, Steve here in Chicago with the morning grain comments. Well, the number one thing that we're all going to be watching today is the signing of the U.S. and China Phase 1 trade deal that will be around 9:30 Chicago time in Washington. Overnight, there was a couple of articles sent out that the deal is not just $80 billion worth of U.S. ag goods over the next 2 years. It includes maybe a total of $250 billion worth of all additional U.S. ag goods over the next 2 years. And so that's a little bit more information that might be supportive to the U.S. economy than just the ag goods. There's also a tremendous amount of confusion in the marketplaces. How does China buy $40 billion of U.S. ag goods when the most they've ever bought before is $27 billion? And a lot of that was in soybeans. And for the most part, Brazil soybean prices are cheaper than U.S. So why would they buy U.S. if Brazil is cheaper? The other thing is that in the marketplace there could be a lot of disruption if they come in and buy all this corn, sorghum, DDG, ethanol, wheat, and other products that they haven't bought as much in the past. It's also been interesting that open interest in corn and wheat has been going up from the bottom. We've seen an increase of about 100,000 contracts in corn and wheat. And what's interesting is that if we kind of put that in perspective, that could be China buying and would equal amount about 4 to 6 million tons of corn and 3 to 5 million tons of wheat. And if they buy wheat, it would probably be Kansas City wheat. So the corn and wheat market probably has some good support underneath it with this increase in open interest that some believe is China buying before they actually come in and buy U.S. cash. We also note that South American weather, Brazil is fine, Argentina is dry, but they're supposed to be getting some rains next week. We also note that the funds yesterday were basically buyers of corn. They sold buyers of wheat. They sold corn, beans, meal, and bought some soybean oil. Overnight, Malaysian palm oil futures are lower, and so that might offer some resistance to our soybean oil futures market. We estimate that the funds right now are long about 40,000 wheat, short about 60,000 corn, and basically even in the bean market. We also note that we have a lot going on in Washington with politics, which could limit some trading in some of the outside markets. Right now we've got the stock market narrowly mixed, dollar's a little bit lower, crude narrowly mixed, and gold's a little bit higher. And again, wheat also is supported underneath the market by talk that Russia has a new grain trader that might control the amount of wheat that's exported out of that country, and that because of all of the riots and protests in France, not a lot of their wheat is moving to the ports. So it kind of sets a stage up for maybe some wheat export demand that we did not expect. Again, no one knows exactly what the China is going to do. No one knows how the market's going to react if they start coming in and buying. They may not buy until March, and most of the open interest that's going up in corn and wheat is July forward. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.